Good morning, everybody, and welcome to the KickStart Specialist Finance Webcast. We've got myself, Nicola Firth from Knowledge Bank, and Breeden from Crystal. And to be fair, we have got a packed episode for you this morning, so strap yourselves in. We'll get started. So, in terms of our weekly summary, we had 773 criteria changes last week. The majority of those, again, they were positive, but that was up from 474 the previous week. So that was quite a big change. We did actually expect to see more changes than we did, because we're still waiting to hear about physical valuations in Wales, Northern Ireland and Scotland, and also details of how they're going to assess the furloughed workers and the self-employed on the SEIS schemes, and also the payment holidays. So we are expecting quite a cascade of information coming at us this week, but of course we'll keep you in touch with our daily emails and on Knowledge Bank as well. So a few lenders were offering higher LTVs on residential and have temporarily reduced them to manage volumes and the service they can offer. So I'll come to that a little bit later on. And to be quite honest, last week was the domain of the specialist lenders. It absolutely belonged to them. So let's get started. So Accord mortgages, so they increased their maximum LTV to 80%. That's on purchases and remortgages. On the buy-to-let side. The Buckinghamshire Building Society, they reduced their minimum loan to £25,000 on desktop valuations. Now that was reduced down from £50,000, and the reason for that was at the request of brokers, so that would allow more purchase cases to proceed in both England and Wales, where it's not possible to do physical valuations. So the Cambridge Building Society, they are back up to 80% loan to value on residential, and that's again for both purchases and remortgages, and there's a maximum loan of £500,000 on that. So LV, they resumed physical valuations for equity release. So that's allowing, that's just in England though, of course, with the lockdown restrictions and social distancing that's still in place in the other countries. Those who are those who are unable to have a physical valuation due to being self-isolating or shielding and what have you, they can still have a desktop valuation subject for the property meeting their criteria. So Monmouthshire Building Society, they launched a range of residential purchase products, and that was up to 65% loan to value, and remortgage up to 75% loan to value. Both of those are to benefit from desktop valuation. Now, to qualify for the desktop valuations, the property must also have a maximum value of £1 million or 1.5 million inside the M25. And new builds are not suitable for the desktop valuations, and there are also going to be some restrictions on some types of flats as well. So Platform, they return to 80% loan to value on residential. This is for buyers in England, and it does include new build properties as well. Santander, they increased their maximum loan amount from 1 million to 3 million, so a really big jump there from Santander last week, and buy-to-let loan to value to 75%. Scottish Building Society, they're increasing their LTVs for residential up to 70%. They'll look at lending up to £1 million up to 60% loan to value, £750,000 up to 70% loan to value, and all of the other loan to values remain as is. Now, the Tipton Colsley Building Society, I mentioned at the beginning that some of them were reducing and restricting LTVs, and Tipton were one of them. So they have announced that their applications are going to be restricted to 85% loan to value. They did have 90%, and at one stage they were the only ones doing 90% loan to value. They did pull their 90% fixed rates a couple of weeks ago now, it's quite a few weeks ago, but they still had their 90% discounted products in place, and now they've pulled those as well, because they're just the volume of business that they were receiving. But the restrictions don't apply to any other products. It was just the 90% loan to value discounted products that were missing. And then TSB have returned to 85% loan to value on residential. So then looking at the brands, the One Saving Bank brands, so Kent Reliance and Precise Mortgages, they have confirmed that so they've been looking at how they are going to assess furloughed workers and all of that, and the SEIS scheme. So they put out a statement last week. So they are accepting 80% of income for furloughed workers up to a maximum of £2,500, along with any evidenced employer top-up over and above that amount, which is great. For the self-employed on the SEIS scheme, they're accepting current income, and they'll be using that for affordability purposes. And the bounce back loans and the coronavirus business interruption loans, the CBILS scheme, they're not acceptable as a source of deposits. That's on residential. On buy-to-let, where the landlord has income that's unrelated to buy-to-let and is in receipt of furlough or the SEIS income, the application can be considered. So that's really good, that's really positive. Again, the bounce back loans and the coronavirus business interruption loans aren't acceptable. What they have said is where the latest bank statement has been obtained, an underwriter is satisfied that the rent or mortgage payments being made help rationalise the sustainability of the applicant's buy-to-let mortgage through COVID-19 period. That's what they're going to be looking for essentially on there. So just to move on then, our last page of highlights. So we have Bluestone Mortgages. So they've returned to lending at 75% loan to value for residential and buy-to-let, with only their heavier adverse range at 70%. So just on the Bluestone, so that's the BBB, where it'll be 70%, and they've got a maximum loan amount of £500,000. Gatehouse Bank, they have taken the decision to temporarily withdraw their buy-to-let HMO products. They will, however, continue to accept applications on the multi-unit freehold blocks as normal. So that's not affected. It's just the HMOs with Gatehouse Bank. So Habito are now lending up to 75% loan to value on buy-to-let. They have a reduced minimum valuation now at £50,000 outside of London. That's down from £75,000. So Hodge Bank, they've made some really positive changes. They have increased their LTI on later life mortgages. So they have removed the restrictions. So now a 4.5 times income on like-for-like remortgages, taking that back up to 6 times income. They've also reintroduced a consideration for earned income up to the age of 80 for affordability. And physical valuations as well are resuming, or have resumed in England. So that's, skipping ahead to getting ahead of myself there. So that's on Hodge. On Kensington, they've resumed lending at 80% loan to value on residential ranges. So this is Select, Core, the Young Professional and Hero ranges of products. So that's Kensington, and then they have also released new maximum loan sizes for the following. So £750,000 for the Select range and £500,000 for the Core, Right to Buy and Buy to Let products. And they've also relaunched Help to Buy and Buy to Let purchase applications in England, and that includes the London Help to Buy scheme as well. So Lambay, they're now doing buy-to-let lending at 70% loan to value on new builds, HMO, multi-unit freehold blocks and properties above commercial, and increase their LTV to 75% across the rest of the buy-to-let range. Their maximum advance on new build is £750,000 within the M25 and £500,000 outside the M25. HMO multi-unit freehold blocks with a maximum loan of £750,000 and a maximum loan to value of 70%. So properties above commercial premises with a maximum loan of £750,000 and a maximum LTV of 70%. So they have increased their overall LTV on buy-to-lets to 75%. They've also launched a new product range at the back end of last week to facilitate that. So you should see that on your product sourcing systems. So Lend Invest, they've relaunched to 75% loan to value on unregulated bridging. So loans are now available from them from £75,000 up to £50 million. And last but almost last, Zephyr Home Loans, they're now lending to 75% loan to value on buy-to-lets for HMOs, multi-unit freehold blocks and flats above commercial. So that they're on their specialist range, the max loan is £750,000, and that includes new build properties within the M25 only. And the new maximum loan size for new build properties outside the M25 is £500,000. So just a little bit of news in this morning. So Interbay have just announced, so Interbay Commercial have just announced that they are now accepting applications or HMOs and multi-unit freehold blocks, so properties with up to 20 bedrooms or units. So the key criteria that you need to know from that announcement, it's up to 70% loan to value. The maximum loan is £1.5 million, but higher amounts will be considered by referral. So if you have got a case that's over 1.5 million, it's worth picking the phone up to them, and that is for both purchase and remortgage. So they have said additional underwriting may apply. Portfolios will need to be assessed to understand liquidity position, and tenant profiles will need to be examined, and additional information may be required. So, did say it was a busy week. So just to finish on the good news story from this week. So the London Institute of Banking and Finance have announced that they will be conducting their regulatory exams, including CMAP, remotely from Wednesday the 10th of June. So that's Wednesday of this week. So they have been doing a pilot, because this was apparently always in the plan for them, that they're doing a distance learning. So they were looking at how they could support online exams. But so this has just been expedited, really. Since April, they've done 150 exams successfully online and done that remotely. So they are going to be able to do that, and they're confident that they can invigilate them, safely, with doing complement to their remote learning, and that the exams are taken and the qualifications will still stand. So they're going to continue to offer this as a choice, even after social distancing, and even when the test centres reopen. So that's great news for anybody who has anybody that's training, or you're taking on new advisors at this time, that's not going to stop that process. That is fantastic news. So that's everything from me. So I'm going to hand over to Joe, and then we'll take any questions at the end. Oh, Joe, I don't know if you've got your microphone on. I can see you moving. There we go.
There we go. There we go. There we go. There we go. Technical problem for me this week. No, absolutely amazing week in terms of criteria changes. And whilst, obviously, we've seen up to 1,000 criteria changes so far during this period in a particular week. I think last week for the specialist market was probably the most significant. Lambe, Zephyr all came out with really, really significant offerings, following up from the OSB group. So amazing times ahead, amazing solutions. I think it's really good news if you've got a self-employed customer. Think about the specialist market, because it definitely feels like the vital lenders in the specialist market are willing to take more of a view to understand each of the self-employed applicants' needs, and that's just great news for our economy, and hopefully we can get things kick-started. Again, not only are we seeing more criteria changes in the specialist sector, but I've actually seen a unicorn deliver this week, and we've actually had a prime commercial lender deliver on a completion. So, my shout out this week goes to NatWest Commercial. They've managed to wade through the CBILS applications and actually finance a commercial property transaction that we've been holding on to for about 4 months right now. It's only a tiddler, 86 grand, but it was at 75% LTV. It was the purchase of an industrial unit in the northwest at 4.42%. The great news about this one, it was a sitting tenant purchase, and it saved the customer about £700 a month rent versus repayment. So that's that guy's business has traded through COVID, and he's in a better position as a result of NatWest support on to allow the purchase of the property that he was tenant of. So great news, and well done there to the boys at NatWest. On the new business side, I think a big shout out for me was Octane. So that these guys, third generation productless lending. We have seen a surgence of overseas nationals looking at either cap raising or purchasing property in the UK and taking advantage of, suppressed house prices during this era. And we've got an Indian national, Indian domicile, looking to buy a flat in London for £2 million. Lambe came out with, it was a UK SPV. Octane came out with some terms, 1.3 million against the 2 mil purchase price at 65% LTV. They did that at 4.49% on a 5-year term, interest only. Absolutely significant, that is, because the London market is dependent on a lot of these overseas borrowers. There's been a withdrawn withdrawal of appetite for some time, and those guys to come out with a rate of 4.49 is significant there. So well done, the guys at Octane. A lender of the week, standout, head and shoulders above anyone else for us last week was MT Finance on the bridging side. These guys have continued to trade since day one. They've not withdrawn any products. They've had a little bit of softening of LTV appetite by 5%. But in terms of their speed, service, flexibility, it's been absolute paramount. So anyone who hasn't tried MT Finance or bridging, I'd absolutely shout out to those guys and recommend that you do so during this period, because we've completed transactions in 6 working days. That includes external val during this period. Last week, they just seemed to step it up to another gear, and we have multiple completions with those on every day of the week. So MT Finance, big thumbs up. Well done, the specialist market. You seem to be getting your act together. Amazing news from Interbay, absolutely amazing. So it seems like they're creeping back into the space, and I think there'll be a lot more developments from those guys as they get a head around what's going on in the wider economy. But it seems to me that there seems to be an announcement from the government, and One Savings Bank seems to mimic that thereafter. So keep going, guys, and let's keep the positivity moving.
Fantastic. That was a proper update this week, wasn't it? There was so much there. It was fantastic. And as you say, that the specialist market just absolutely coming into their own, aren't they? And leaving the rest sort of standing last week. We've got a question, Joe, from Steve Wilkes. When do we expect more lenders to offer 90% residential mortgages and 95% mortgages to come back into the marketplace? It's an interesting one.
That was yours, mate.
I'll take that one. Thanks, Steve, for that question. That's we were quite encouraged to see 90% still there. And then what happened is, because other lenders pull them, so like the Tipton are a classic example, they were left out on a limb and their exposure limits were just massive because everyone was putting 90% to them. So I think, I really do think 90%. I think 95% is perhaps a bit too soon. I think they need to see what the market's doing. I really do. With 95%, but I think we should see more 90% come back into the fray, especially now that physical valuations are getting to the stride. I mean, don't forget, they're still not quite caught up yet with physical valuations. We don't expect to see that probably while sort of going on the back end of the month, really. And I think that'll be a good gauge to then the market, because the other thing that, as we look and say, okay, what is the market like? What's the property market like at the minute? It's been a bit unrealistic, because since we finished, it was at the 18th of May that people were able to do viewings and stuff like that. So you've almost got this big spurt of people coming through. So we've got to plateau, see what does that look like first. But I definitely think the confidence is there, and I think as soon as lenders see other lenders going in at 90%, they'll do the same, because their exposures, they kind of keep a lid on that. So I think we're going to have a clearer picture on that sort of by the beginning of next month, to be fair, Steve.
And I probably won't be surprised to see some government stimulus around Help to Buy and probably propping up the market that way. I think it seems to be, for me, again, I can't quote, I'm not any insider information on it, but I would say it seems a sensible way to stimulate the housing market would be to support Help to Buy and get those LTVs up for the first time buyers and get the housing market moving that way.
And actually,
I hope.
I think you're right, Joe. We're waiting on information on that, really. We've seen some proposals that have been put forward to extend the Help to Buy scheme, and also that there are holidays on that as well that are being put forward. So the National Federation of Builders are really pushing for that, because obviously that should have ended. Obviously, last application is going to by the end of the year. So we've not heard anything. I did check back last week on that, because we did say we'd let everybody know, but there's just nothing's been announced as yet really on that. Another question we got from Wayne Harrison: do you have any information on whether valuations are holding up? Probably that's one for you, Joe, actually.
Yeah. Do you know what? It's been quite a surprise. I mean, firstly, without shadow of a doubt, things have been delayed. There's a delay on getting instructions out. There's a delay on when we've got instructions out, the time scales, which appointment dates are being confirmed. That whole thing is absolutely at loggerheads. But we have had the first 2 external vals come back on Thursday, Friday last week, and both of them valued up, which was absolutely amazing news. So we were expecting a down valuation on at least one of them, having done a bit of research ourselves on just a lack of comparable activity. And actually, I probably think that if we compared that physical val to what would have come in at an AVM, I think we probably got a better result with the physical val. So, again, I hope the RICS have been sensible with their guidance to these valuers, and hopefully there's a bit of positivity. And we've all been reading about the Zoopla Rightmove activity behind closed doors, and hopefully the valuers have listened and actually done a bit of research, and that's been reflected in the first couple of hours. But happily, I'll bring that up next week, and I think that's a really important topic for you guys to get your head around, as well as myself, really.
Yeah, definitely. I think that's the challenge has been around comparables, hasn't it? And that's the real sort of challenge for them. But certainly we've not heard of anything. I mean, always you're going to get down valuations, but we've not heard of any disproportionate to the situation that we're in.
Well, yeah, I spoke to a chap at the EI group who do a lot of auctions, and they're saying auction rooms are absolutely rammed at the moment, and still achieving over guide price. So again, we were wondering whether that would fall, and we kind of maybe thought the investment property might reflect guide price to actual purchase gavel price in the mainstream market. But they're saying they're absolutely stacked, and people are buying them over the asking price. So look, I just hope this £30 billion worth of liquidity that the government pumped into the economies, circulating, keeping the housing market buoyant. That's a big hope for me. Yeah,
it is, and especially like you and I went through the whole credit crunch thing and all of that. And it was very, very different to what this is now, and I think there are certain sectors that are going to really, really struggle. I think they certainly like travel and leisure, that kind of thing. I think those industries have definitely got a long way to go, but it feels like our industry is in a really strong position. And it doesn't feel like it felt last time, does it? And it's different sets of circumstances, but it certainly doesn't feel like it was last time. So fingers crossed, it makes a difference.
Agreed. Confidence, we all just need to install confidence and make sure that our customers are confident in completing the transactions. One of the things that we have seen is that because of, it's not just economic anymore, is it, or viral, there's a lot of political uncertainty out there in the world that people are maybe just holding off on transactions that they've started. So just be absolutely sure that your customers are committed to completing the transaction. At the moment, we all know time is a very, very precious commodity. So just make sure that you've got absolute buy-in and you're backing the right horse. Yeah,
absolutely. I think that might be. Has anybody else got any more questions for us? I think that might be it. I think there's a lot of information today. Certainly, that was a lot of information. So thank you, everybody. If nobody's got any more questions, we'll wrap up for this Kickstart, and then we'll see you next week for more.
Amazing.
Brilliant.
Right, guys.
Thanks, Joe. Speak to you next week.
See you, Nick. Be safe. Bye now.
Bye bye.